Hi, everyone, and welcome back to the channel. Today, we're talking about something that affects nearly all of us: credit scores. We've all heard of the term, but do you really know what it means and how it impacts your life? By the way, my name's Krista, a certified financial coach and expert in the field of personal finance. In this video, I'm going to break down the truth about credit scores and give you practical tips to improve yours very fast. Whether you're looking to buy a house, a car, or you just want to improve your financial health, a good credit score can make a huge difference. So, if you've ever felt confused or frustrated with your credit score, stick around. I'm going to clear up the mystery and give you actionable tips to boost that score as quickly as possible. Let's dive right in. All right, so let's start with the basics. What exactly is a credit score? Your credit score is a three-digit number that reflects your credit worthiness, or the likelihood that you'll repay borrowed money. It's calculated based on your credit history, and it ranges from 300 to 850, with a higher score indicating better credit health. There are different scoring models out there, but the most common one is the FICO score, which is what most lenders use when evaluating your credit. Generally, credit scores are broken down like this: 300 to 579 is a poor credit score, 580 to 669 is fair, 670 to 739 is good credit, 740 to 799 is very good, and 800 to 850 is excellent. And here's why your credit score matters. Lenders like banks, credit card companies, and mortgage lenders use your credit score to determine how risky it is to lend you money. The higher you score, the better the terms you'll get, like lower interest rates. It can also affect things like your ability to rent a place, get insurance, or even land a job in some cases. When I used to hire candidates for certain jobs like accountant, I would sometimes have to run a credit report on the candidates. If your credit score was low, then an employer would not hire you because it would be just too risky for them. To them, if you have a low score and you are directly responsible for dealing with money at the company, you might do something illegal. Now that we know what a credit score is and why it matters, let's break down how it's calculated. Your credit score is determined by five main factors, and understanding these will help you improve your score faster. First, the most important factor is payment history. This makes up about 35% of your score. It includes your on time payments for things like credit cards, loans, and mortgages. If you've missed payments or have accounts in collections, this will truly hurt your score the most. So, making sure you pay your bills on time is crucial here. Next, we have credit utilization, which makes up 30% of your score. This is the ratio of your current credit card balances to your credit limits. Ideally, you want to keep this number below 30%. So, if you have a $1,000 credit limit, try not to carry a balance of more than $300. High credit utilization signals to lenders that you might be overextended, which can hurt your score. The next factor is length of credit history, which accounts for 15% of your score. This includes the age of your oldest account and the average age of all of your accounts. The longer your credit history, the better. So avoid closing old accounts even if you're not using them. Then there's types of credit, which makes up 10%. This includes the mix of credit you have, such as credit cards, mortgages, car loans, and other types of credit. Having a variety of credit accounts can boost your score, but it's not necessary to go out and open new accounts just for this reason. And lastly, we have new credit, which makes up 10%. This is based on how many new credit accounts you've opened up recently and how many inquiries have been made into your credit. Opening too many accounts at once can lower your score temporarily, so be very mindful of this when applying for new credit. Now, let's get into the good stuff, the actionable steps you can take to improve your credit score fast. I'm going to give you a combination of short-term and long-term strategies. First and foremost, pay your bills on time. This is the number one factor affecting your credit score. So if you have overdue bills, get caught up as soon as possible. Set up automatic payments or reminders to make sure you never miss a due date again. Don't forget that you're using a service or a product, and it is unethical not to pay your bills on time. After all, you did receive the service or product on time, right? And if you have any accounts and collections, try to negotiate with creditors to remove the collection from your report after you've paid it off. Many companies actually offer discounts to customers who set up automatic payments. Use this discount. Then go to your calendar and add the due date so you don't forget. A good measure is to also have a surplus in your checking account just in case you forget that a bill is supposed to be paid automatically. Next, let's talk about credit utilization. If your credit card balances are high, try to pay them down. Ideally, keeping your utilization below 30%, and if you can, aim for below 10% for the best impact on your score. If you're unable to pay off your cards in full, try to spread out your spending between different cards to keep the balances low on each one. Another fast way to improve your score is to become an authorized user on someone else's credit card. If a friend or family member has a long positive credit history and a low credit utilization rate, you can be added as an authorized user, and their credit score habits will boost your score. Just make sure they have a solid credit history. I actually helped a family member by having them as an authorized user on my card to help boost their credit score. And when the card came in the mail for them, I just didn't give it to them. Next, take a look at your credit report for errors. You're entitled to one free credit report per year from each of the three credit bureaus: Equifax, Experian, and TransUnion. If you find any mistakes, like a late payment that was actually made on time, dispute it. Getting errors removed can give your score an immediate boost. Try to avoid opening new credit accounts if you're working on improving your score. While having a mix of credit types can help, opening too many accounts in a short period of time can actually lower your score temporarily. Only open new accounts when absolutely necessary. And finally, settle any past due debt accounts. If you have any accounts that are past due, settle them as soon as possible. You can even reach out to the creditor to ask if they'll remove the negative entry after you pay. Many creditors are willing to work with you if you're proactive. While these tips can give your score a quick boost, maintaining a healthy credit score over the long term is key. Here's what you can do to keep your score high. Keep your old accounts open even if you're not using them. The longer your credit history, the better your score will be. Closing old accounts can actually shorten your credit history and hurt your score. Use a free service to monitor your credit regularly. Services like Credit Karma or your bank's credit monitoring can give you insight into your credit score and show you how your score changes over time. And finally, consider diversifying your credit. Having a mix of credit types, credit cards, installment loans, mortgages, can help improve your score. But again, don't open unnecessary accounts just to diversify. And there you have it. Those are the key steps to improving your credit score fast and maintaining it over time. It might take some time and patience, but with consistent effort, your credit score will reflect your hard work. If you found this video helpful, make sure to give it a thumbs up, subscribe for more personal finance tips, and drop any questions that you have about credit scores in the comments below. I'd love to help. Thanks again for watching, and I'll see you in the next video.